Hey guys, I thought I'd just do another video because I really want to show you this particular trade setup that's looking really good. And it's a really good example that we're using multiple different techniques to verify potential entries, targets, this one's actually setting up rather well. I just randomly came across it. I knew that there was going to be some dollar rally and then a pullback and then another big move up. But until I looked at it in a bit more detail, I was like, wait, there's actually a pretty good opportunity to short the dollar and hopefully make some make some good money out of it. Hopefully, anyway. So just starting off, this is the weekly. So I've shown you this a couple of times. So we had this big rally, then we consolidated. We've just done this. Basically a ascending wedge pattern in a way, waiting for price to break out, which it did, and we had this big spike up. So now I'll go to the daily and I'll kind of explain in a bit more detail there. So so we broke out of the channel, and looks like now price is finally reversing down to find some level of support before it makes its move to the upside. Now, so I've already got myself involved in this trade to the short side, but I want to quickly show you just how the technique I used and what I used to kind of confirm potential entries and targets. So just zooming into the 4 hour, okay? Now, there's a couple of things I'm looking at here. So I'm looking at obviously structure, right? So price, when price broke down, it broke through this key level of structure here. So that's my first sign that this is going down. Very important sign there. Now it looks like price has kind of come to this level, and it might hang around there for a little bit, but we're going to look for evidence of it going down again. Now, there's a pattern in here too. So, actually, I'll do the other one. I'll do the entry part. So there's actually a double top here too. Okay, a pretty good double top as well. So I haven't shown you this strategy before, but most people, what they do is there's two ways to take the double top. There's one way, which is when the double top forms at the next candle, next bar market open. You would place a short position straight away, and then just ride the market. The problem with that is that it's a 50-50 win. 50% of the time you're winning, 50% of the time you're losing. It's still good, but the problem is, we want to try and get the best opportunity, because what will happen sometimes is price will close, and then you enter here, and what happens is it might go down, but it might go straight up. You might just decide to go up, and then your stops will usually be here, and if price goes down and whips back up, you can just close you out. So it actually happens, half the time. So just be careful with that. But there's a better way of entering double tops. It's a lot more conservative. So I'll quickly show you what it is. It's called a 2618 trade. It's basically just, looking for a double top like this, looking for where prices trend. There's a clear trend, which is this. So there is obviously a clear trend. There's ups and downs, and then a breakout. Then you get this, and you get the double top. So that's a clear trend there. And then the next thing you want to look for is there bearish divergence, right? So you look at the RSI, and you can clearly see here there's bearish divergence there. Okay. Basically, it's saying that at these 2 points here, what's the direction of the RSI? So you've got bearish divergence, and then then price rolls over. This is key. So this is the kind of like the main structure level that is holding this all together. So the idea behind the 2618 is once it breaks structure, right? you will draw a Fibonacci retracement from the trigger bar, not the trigger bar, the I can't remember what bar it is called, entry bar, I think. And then just basically go down to the swing low of this, the current move here. And then at each time, when at the swing low, what you want to do is, if it's here, so the idea is that when price goes back up and hits the 61.8%, you would enter a sell signal at sell at market or whatever it is, or limit order sell. Now that's providing that price goes up from here. But if this keeps going down, then you simply just move this down and down, 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 down until it finally, basically just moving it as it goes down, you're moving it. But as it goes up, you want to watch for it to see if it hits the 61.8%. Now it has to hit the 61.8%. You can't be just, it depends on your rules. It's all up to your rules, really. If you wanted to enter at 50%, that's fine. 78% you can enter as well. If your risk reward is too, like as you go down, your risk is increasing basically, because you're going down. Finally, you get to here, and then your entry's here, but your risk is up here because your stops still have to go there. So so it's all going to be dependent on your risk reward factor. So, oh shit, mistake. So that's that there. So, and your targets will usually be the 127 extension. Okay, so if I draw that from swing low, and let's just say the price stopped there, for example. Just drawing the sorry, I forgot to put in the 0. Here we go. 0. Right. So okay, so that's, we're assuming that price eventually stops somewhere here, and therefore your entry would have been there. Actually, I'll move this to mine. Yep. So you can use the Fibonacci extension, and then just basically go a swing high to swing low. And your targets would be the 127 extension, which is basically here. So targets. Oh. Okay. So you're basically saying, yeah, that's target 1. You look for target 2, but that's pretty big move as it is. So what will happen is, the idea is, let me just run it through again. So price will go down like this, and then it will, at some point it will reverse. So you want to watch for it to get to the 61.8%. When it does, execute the trade, and then when it goes down, exit at target 1. Interestingly, this is also a perfect ABCD pattern too. So, well, close enough. So yeah, that's that there. Now that's the first bit there. So now you've got a way to enter the market. That's an option. As if you didn't know how to enter the market, that's something you can try. Okay, because it's already broken structure. Now it's pretty much waiting for price to retrace back up and hopefully give you a 618 entry. So for now, we just wait for that. If it goes down, we'll just pull it back up. Now, also, what's the other one? So even without this, right, even without using 2618, you can always look for structure. So when price pulls back up, this one's a bit tricky because you've got all this, price action that makes it difficult for you to pinpoint where the actual key level is. But again, it's only a few pips, so it's up to you what your risk reward is. If you want to play it safe, you can kind of see if you can maybe get it up here, maybe get an entry up here. But if you miss it, you miss it. So, but yeah, so that's that there on the entry side. But the targets. Now, the interesting thing I want to note was, if you look on the 4-hour, you go down, you zoom out a bit. There's actually a pattern. So there we go. I just drew the measurement before, so I didn't have to do it now. So there's a cipher pattern there, and that terminates at 78,616. There we go. And you got some structure. So that's not, that shouldn't be your target level, but that's kind of giving you an indication that, you know, if it goes down, it could go down, you know, there, which could give you a perfect entry to go long, because, you know, this is just a pullback. All this is just a pullback, you know. So I'd expect it to go down, and the level I was going to look at was around this level. So, you know, this level could go down here and bounce up, or it could go down further down. You don't know. Sometimes it does that. So if it goes down further below here, then you know that you've got a potential entry here. Okay. But if you could get one there, that would be your. If you can get put it this way, if you get it here, right, you could be potentially looking at this kind of move, right? Now I'm going to bring it out from the weekly, if you can, right? I'm not saying you can. You know, you're going to be potentially looking at. Let me just do a extension to see. Okay. And I'm using FXCM's US dollar. I didn't use the DXY, so what am I looking for? Price. There we go. So potentially looking at 4.8, almost 5%. That's pretty good. So it might actually go higher, but let me see if I can do a fib. So maybe even 125.95. So not much higher, but you can probably get a good move out of this. So just keep that in mind. So again, yeah. So I've used a couple of things here, just a cipher pattern there as a potential entry, and used as a way to conduct some predictive analysis. But let me just have a look at my US dollar, because I entered it before, just haven't checked it since. So yeah, so it's just at break even at the moment. But so yeah, but at the minimum, even without the pattern, I think this is a good entry, and it's probably a bit too late now. You can enter now, I guess, but you can still wait. But yeah, at least a target of at least this area here, somewhere around here, is at a minimum. Possible you can get extended targets. You've got RSI that's pretty much in almost oversold on the 4 hour. So you can still get, yeah, in that 4 hours you can still get a pretty big move there. So yeah, I thought I'd just show you that. Hope that helps. Cheers.